We're going to do a video on gold price prediction. We're going to look at the daily, weekly, and monthly charts, and then we'll look at some algorithmically generated entry prices from RBAM Research. This is a daily chart here with a 200-day moving average coming across here. You can see gold put in a tremendous rally in the last couple weeks, put in a high Friday of $1,775 on this COMEX gold futures contract for, this is a December contract. And as you can see, we're approaching the 200-day moving average, which is at 1806 roughly. So what's going on here? Well, the first thing we'll notice is gold is extremely overbought. I mean, this is just almost panic buying. I hate to say it, but it's the truth. It's above the green 5-day moving average, above the red 20-day moving average, but it's really beginning to be overbought. It's not sustainable. I expect gold to drop back down here to about $1,715 level just to correct, but it may catch some support sooner than that at around the $1,725 level. But I do think gold will sell off and correct before it continues, if it's going to continue. Super aggressive buying here. And it looks like gold may have put in a bottom here at $1,618 on the 3rd of November, but it definitely is overbought. Let's take a look at the weekly chart and see what we can see. We can see that gold came down here and broke through its weekly support on the 200-week moving average in blue. We can see gold closed definitively above the 20-week moving average for the first time since April of 2022, but we have a 5-week moving average that's still below the 200-week moving average, extremely negative, and we also have a 5-week moving average below the 20-week moving average, another very negative situation. Whenever you get rallies in a price that is above the 5 above the 20, it's just not a positive situation when that 5 is not above the 200 and above the 20. You want green, red, blue. You don't want red, blue, green. That's just not a good sign. Is it hugely negative in the long run? No, not necessarily, but it's negative in the short run. If we take a look right here, we can see this rally, the significant rally, we had red, green, and price above it all. And of course, blue's down here. So blue, red, green, and price. That's what you're looking for. Blue, red, green, and price. So we need to get this green up here, and until we do, you know, it's very difficult to get hugely enthusiastic on gold unless you're long, in which case you're making a ton of money. But from a technical perspective, this could be a false rally here, and we could head back down below the 1618. I'm not predicting anything. It's all my opinion. But there's no denying we're getting an extremely strong rally, but there's also no denying it's not technically supported yet. So we need a fallback. We need some time. We need this green 5-week moving average to begin to move up and get above the 20-week. That's not going to happen in 1 or 2 weeks. That's probably going to be a month before that happens. And so it's just a question of time to see what happens. Let's take a look at the monthly and see if we get a better idea there. We can see that on a monthly chart, gold is still in a bull market. And you can see it is below the 20-week and it's above the 5-week, but it's all of those are above the month. This is a 20-month, a 5-month, and a 200-month. Everything's above the 200-month, so in the long term, gold is still in a bull market. And so from this perspective, you can see we've had relatively tight support here at the 1620 level for 3 months now. So that's a great sign. And then we can say, hey, it's starting to rally up above and break above. We need to pull back a little bit, slow down a little bit, and work our way up with gold. So it's not all negative with gold from a technical perspective, especially from a longer term perspective. But in the short run, gold is simply overbought. I don't want to sound negative. It's still in a bear market on a daily chart. It's overbought. It's probably going to pull back to around 1725 minimum. And then we'll take a look and see what happens. Gold looks better on a daily chart than it does on a weekly, and it looks better on a monthly than it does on a weekly. So the weekly chart is a little problematic, but that's what we've got for gold for you. Let's take a look and see what RBAM Research says about gold for tomorrow, the 11th. We're here, 11 November 14th, Monday. We have 1, 2, 5, 10, and 20 day, and we look like we've got shorts at 1758 for the 1 day and 1767 for the 2 days, 1777 across the board for the rest of it. Let's take a look real quick and see what that looks like. Let's take 1758 and see what that looks like. 1758. So it's looking basically gold closed at 1769. So basically it's saying if gold closes down or trades down significantly like I'm expecting, it's a short. So that's consistent with my analysis. Again, all for entertainment purposes only, all hypothetical. Not predicting anything, all in my opinion, but that's what gold algorithmic prices on RBAM Research is calling for tomorrow, the 14th of November. Again, can't use anything for anything other than entertainment on this chart, including my analysis and our entry prices. You trade at your own risk. You should do your own analysis. But you can get access to everything we've got every morning before 7 a.m., 190 stocks, the major forex pairs, and the most liquid futures contracts at rbrandresearch.com. Link in the description below. It's a trial access over there with no credit card required, and it's all updated by 7 a.m. the morning of Monday through Friday. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have a ticker symbol, a future symbol, or a currency symbol you want us to do a chart on, please leave it in the comment section below and we'll consider doing it for you.